Understand on-chain data in 1 minute, keeping you up to date with global crypto dynamics in 24 hours. Floating between 60,000 and 62,000, will Bitcoin be able to withstand pressure? Will capital fleeing the market and lack of profitability should we enter the market now? The number of large Bitcoin holders has surged and Bitcoin mining industry is facing a reshuffle. Coinbase 3-hour outage scared investors. Is the credibility of the world's second largest exchange at stake? Dogecoin meme token soar, PEPE skydives to create a new all-time high. Why did meme coins suddenly take off? The protagonist of the retail versus Wall Street event stirs up the crypto world, igniting a meme coin wealth craze. Worldcoin bubble about to burst, a sell-off wave sweeping the entire crypto market. Worldcoin sees sell-off tsunami, wealth transfer game exposed, the retail dreams shattered. May 15th, Wednesday, so this is Bitcoin TV channel. So how is the blockchain industry? I'm Zoo. Let's take a look at the 24-hour crypto headline sponsored by DeepCoin. On May 1st, the Bitcoin fell below $60,000, hitting a low of around 56,500, and the market sentiment suddenly showed an obvious turning point. Exchange net positions turned from negative to positive, entering the positive position range, and have maintained this for 2 weeks so far. Subsequently, Bitcoin rebounded above 60,000, but net positions did not show a significant continuous increase. Although exchange net positions remain in a positive range, the magnitude has remained relatively small and even showed signs of slight pullback. Currently, the key battleground seems to be around $60,000. If Bitcoin fails to hold $60,000 subsequently, the market may trigger panic sentiment. In the past 7 days, the total market cap of USDT decreased from 111 billion to 110.8 billion, a market cap decrease of 200 million. Compared to the previous week level, net inflows of 500 million to 1 billion, this has directly turned into a net outflow, which is a dangerous signal. If it's just a wait-and-see mentality, then the capital could remain in the market waiting for opportunities to buy in. In addition, in the past 7 days, USDC's market cap decreased to 32.88 billion, with a net capital outflow of 370 million, which is significantly more than USDT. US investors who are at the forefront of news tend to be more sensitive in their assessment of the market. This suggests that investors are not just taking a wait-and-see attitude, but are also showing signs of mild panic and a bearish outlook on the short-term market. At this point, the market cannot withstand significant volatility. If there is a relatively large fluctuation, it's easy to trigger a spread of panic sentiment. There is a small buying force waiting and watching on the upside, but a relatively large downside risk. Bitcoin's market dominance has remained about 52% since March, indicating that the overall market is dominated by Bitcoin. In the past week, Bitcoin's market dominance soared from 52% to 53.96%, a new high. The decline in Bitcoin's market cap has actually diluted the capital of alternative coins, and the contraction of altcoins in the recent period has been nothing short of appalling. The market has hardly any hotspots to speak of in the short term, and the market clearly lacks profitability. Bitcoin generally only sees such a high market dominance during significant one-way trends or during heated speculation. Now that Bitcoin is still defending the 60,000 level and fluctuating wildly between 60,000 and 70,000, do you think the probability of a one-way trend is higher on the downside or the upside? After Bitcoin's forced halving, the block reward decreased to 3.125 Bitcoins, with the supply cut in half. Miners' revenue plummeted and the mining companies cried that business is tough. In theory, after Bitcoin's halving, the annualized inflation rate decreased by 50%, significantly exceeding gold in terms of scarcity, which should drive the coin price higher. However, in reality, since the halving, Bitcoin has remained in a high-level sideways correction, with prices declining slightly by 3.87%, putting pressure on miners and causing short-term investors to face losses. Essentially, each halving is another dynamic balance of the market supply and demand. In this rebalancing process, what are the trends in the market capital worth paying attention to? What specific pressures is the mining industry facing? What is the current state of Bitcoin's demand side? Let's take a look together.
Data shows that the percentage of lost chips has increased to 15% after the production cut, with a significant increase in the number of large holding addresses of 100 BTC or more. The current circulation rate is 0.01044, a decrease of nearly 23% from the day of the production cut of 0.01356 and nearly 33% from the beginning of the year, a significant decrease. Since the beginning of this year, there has been a significant increase in the number of chips held for periods ranging from 1 month to 3 months, 3 months to 6 months, and 3 years to 5 years. Especially notable is the increase in the percentage of chips held for 1 to 3 months, which has increased by 7.14 percentage points this year and by 2.44 percentage points after the halving. Among all addresses, the number of addresses with balances between 1,000 BTC and 1,000 BTC has increased by 1.07%.
After Bitcoin's forced halving, the entire network's hash rate experienced a significant decline of 7.43%, likely reflecting miners shutting down some mining rigs in order to maintain profitability. At the current coin price and electricity cost levels, the shutdown price for many miners has soared to 55,000. This means that if the Bitcoin price fails to continue rising, the mining industry will face immense survival pressure. In fact, Bitcoin's recent high-level sideways correction has already made many miners feel the chill of the market. Miners are currently facing significant revenue pressure, especially in regions with high electricity costs, with only a few mining rig models able to remain profitability. If market conditions do not improve, electricity costs will become a key factor for miner survival. So the electricity cost that we have is truly unmatched in the market. If we talk about who benefited most from Binance fine, it would be none other than Coinbase. Financial report data shows that in the fourth quarter, Coinbase achieved a net profit of $273 million, or 1.04 per share, reversing the $557 million loss in the same period last year, marking its first quarterly profit in 2 years. However, Coinbase is still the second largest exchange globally by trading volume, with a 24-hour trading volume of 2.4 billion, while Binance's 24-hour trading volume exceeds 18.7 billion. But thanks to the approval of the Bitcoin ETF in the first quarter, Coinbase's first quarter profit surged to over 1 billion, seeming unstoppable at the time. However, at 4:19 a.m. on May 14th, this dazzling star suddenly dimmed, experiencing an unprecedented 3-hour system-wide outage, truly making countless investors and users break out in a cold sweat.
The sudden major crash occurred at 4:19 a.m. UTC, with the Coinbase official status page indicating a complete system outage for the exchange. Although officials intervened promptly and made every effort to repair, the system was not fully restored until 7:34 a.m. the next day. Coinbase stated that while the exact cause of the interruption is currently unclear, they will continue to investigate thoroughly to identify the problem. However, some users were dissatisfied, complaining on social media that despite the official announcement of full system recovery, their withdrawal and transfer requests remained offline and could not be executed successfully.
This major outage has severely damaged the Coinbase image, and people are also questioning the reliability of centralized exchanges. Of course, the recent outage is not Coinbase's first. In early February of this year, Coinbase and several other cryptocurrency exchanges temporarily halted operations due to a surge in trading activity. However, system-wide outages are still rare, as such incidents undermine user trust in platforms, especially those providing trading services. After all, centralized exchanges like Coinbase and Binance are typically the first touchpoint for mainstream users to access digital assets, and stability and security are crucial for the reputation of the entire cryptocurrency industry. In comparison with centralized exchanges, although decentralized exchange DEX have lower trading volumes, they are favored for not requiring trust in third-party institutions and providing a more transparent and fair trading process. Coinbase's outage incident has undoubtedly provided an opportunity for development of DEX, prompting people to re-examine the pros and cons of centralized and decentralized exchanges. Of course, the flip side is that if you lose your coins on a decentralized exchange, there's no way to recover them. Each has its pros and cons and its own dilemmas. In the turbulent crypto market, some tokens can shoot across the night sky like a meteor, sparking heated market discussions. As Bitcoin rebounded to around 63,000, many cryptocurrencies also began a new round of rebounds, with meme tokens leading the strongest rebounds. Data shows that among the top 100 cryptocurrencies by market cap, 6 out of the top 8 largest gainers in the past 24 hours were meme coins. Doge ranked third with a 10.1% gain, Flocky ranked second with a 19.1% gain, and PEPE ranking first even broke its all-time high. Let's take a look.
Recently, PEPE coin staged a thrilling skydiving act, surging by 19.1% in a single day, successfully breaking through $0.0000001119.9, reaching a historical high. The instigator of this frenzy must be mentioned, none other than Keith Gill, the protagonist of the Retail Investors vs. Wall Street event 3 years ago, known by the online moniker Roaring Kitty. Encouraged by this, meme coins related to GameStop and Roaring Kitty soared, with Kitty coin on Solana particularly eye-catching, skyrocketing by an astonishing 206.00%.
3 years ago, Keith Gill led a group of fans on the internet to drive GameStop stock price to an unbelievable frenzy, attracting global attention to the game retailers and allowing many retail investors to experience the accumulation and loss of wealth overnight. After a 3-year hiatus, Keith Gill's return caused the GameStop stock price to initially surge more than 98%, and the AMC theaters even surged over 121%, both halting trading due to excessive price volatility. The crypto world also swept up in the meme frenzy, with old fans excitedly watching as the meme coins took off, from X-Men, Wolverine-related meme coins to the surge of Melvin Capital. Every move sent ripples through the market's nerves. Although most tokens fell into silence after a brief surge due to illiquidity issues, this meme craze undoubtedly brought new vitality to the cryptocurrency market. Worldcoin, this highly anticipated cryptocurrency project, was once viewed with high hopes as an innovative work that could change the world. The WLD coin price surged to a historical high of 11.972 on March 10th, but has since shown a downward trend. Despite the official announcement in April of plans to launch a Layer 2 network combining finance and identity verification, it failed to regain momentum. However, as WLD supply began inflating at a rate of 4% per day, investors started feeling uneasy. This was especially true for global users who had scanned their irises and regularly received the WLD airdrops, as the bull market they had originally anticipated now seemed out of reach.
Whale trader at DeFi Squared bluntly stated in an article today that Worldcoin could potentially become the largest wealth transfer case in the entire cryptocurrency cycle. Worldcoin is likely to face severe inflation. Firstly, the fully diluted valuation of WLD stands at a staggering $60 billion, but due to grant distribution and operator claims, its value depreciates by 0.6% daily. Secondly, the Worldcoin Foundation announced the sale of $200 million worth of tokens to market makers at a discounted price, equivalent to selling an additional 18% of the total circulating supply to counterparties. Finally, with the start of VC and team unlocks, the WLD supply will begin to expand at a rate of 4% per day.
This sell-off wave will undoubtedly deal a huge blow to Worldcoin investors. Many retail investors may still be immersed in the dream of driving up prices, but the harsh reality is that in this market full of manipulation and greed, they may just be pawns being exploited. However, this is not the first such case in the cryptocurrency market. In recent years, we have witnessed countless similar cases. Those token economics designed with a low circulating supply, high FDV models have often become get-rich-quick paths for insiders. Through permanently overvalued hedging against the locked allocations via perpetual contracts and OTC, they have achieved the massive wealth transfers. Retail investors, on the other hand, often become sacrificial pawns in this game. Therefore, it's crucial for investors to understand the truth behind token economics. When choosing investment projects, we need to remain vigilant and think rationally. Do not be fooled by superficial prosperity and temptation, but delve into the intrinsic value and risks of a project. Only then can we steadily profit and avoid losses in the cryptocurrency market. Finally, let's wait and see how Worldcoin's trend unfolds. How will this sell-off wave impact the market? How will investors respond? This will be the focuses of our attention. In this ever-changing and uncertain market, only by staying vigilant and adapting flexibility can we remain undefeated.
Since 2021, El Salvador has successfully mined nearly 474 bitcoins using geothermal energy provided by the Tecapa volcano, increasing the government's Bitcoin reserves to about 5,750 coins, with a total value close to $354 million at current prices. The official website of the Securities and Futures Commission SFC of Hong Kong shows that the virtual asset trading platform license application submitted by Huobi HK to the SFC has been withdrawn on May 14th. Information from the Tron DAO reveals that Google Cloud has officially joined the Tron blockchain's list of super representative candidates. Optimism announced the launch of the Superchain Dev Console application deployment rebate program on the X platform, allowing developers to deploy applications on the Superchain for free. Developers deploying on the Superchain can receive a rebate of 0.005 ETH per deployment. Galaxy Digital Holdings recently announced that its first quarter revenue and net profit increased to $421.7 million, representing a growth of over 200% compared to the same period last year. The company's strong financial performance is partly attributed to its record-breaking performance in its mining business.